Please subscribe my YouTube channel. Thanks for watching.
China has been quietly stacking gold, and the world is only half paying attention. While social media argues about crypto, inflation, and stock market swings, central banks are making a very different move, buying physical gold, and China is at the center of that story. This isn't a random investment, and it isn't about tradition. For China, gold is strategy. It's a tool. It's a shield. Because gold isn't controlled by any government. It isn't printed like currency, and it can't be erased with a banking restriction. That's why it matters. When a country as powerful as China keeps increasing its gold reserves, it sends a message. We are preparing. Preparing for what? That's where this gets serious. The reason China hoards gold is tied to power, global finance, and the future of the dollar itself. And if China's plan succeeds, it won't just affect governments. It could change trade, prices, and how money works worldwide. So in this video, we'll break down China's gold strategy step by step, explain the hidden motivations behind it, and reveal why this quiet gold rush could be the biggest financial signal of our time. To understand why China hoards gold, you have to understand why gold is different from everything else. Stocks are claims on companies. Bonds are promises from governments. Cash is only valuable because people believe it is. But gold is an asset that carries value without needing trust in any institution. It doesn't depend on interest rates, politics, or promises. It's not someone else's liability. That's the key. When a government holds foreign bonds, it depends on the issuing government to pay. When it holds gold, it owns something real, physical, and globally recognized. For thousands of years, empires came and went, but gold remained accepted across borders. That's why central banks love it. Gold is not meant to generate profit. It's meant to preserve power. It sits in vaults like financial insurance. If currencies weaken, gold holds value. If markets crash, gold stabilizes reserves. If political tensions rise, gold becomes the last asset that can still function. This is why central bank gold buying is never a casual trend. It's an announcement without words, a quiet warning that the future may not be stable. Now, let's talk about China specifically. China's economy is massive, and for decades, it became the world's factory. Countries bought Chinese goods, and China earned foreign currency, especially US dollars. Over time, China built enormous foreign exchange reserves. This sounds powerful, but it carries a hidden weakness. Most of those reserves are tied to the US financial system. A huge portion of global reserves are held in US Treasury bonds. These bonds are normally seen as safe, liquid, and reliable. But to China, they also represent dependence. Because if you're holding trillions of dollars in US assets, you're holding the financial instruments of your biggest strategic rival. Even if the US is stable, the relationship is complicated. And as global tensions rise, dependence becomes risk. China understands one brutal truth. Financial systems are not neutral. Control over global finance can be used as leverage. So when China buys gold, it's not just diversifying. It's reducing exposure. It's slowly shifting reserves away from political vulnerability. Gold gives China an asset that exists outside the dollar system, one that can't be frozen, blocked, or controlled by another country's policies. One major reason China hoards gold is what can be called sanctions. Insurance. In the modern world, wars aren't only fought with weapons, they're fought with banking access, payment systems, and financial restrictions. Sanctions can stop a country from using certain networks, accessing reserves, or trading normally. The world has watched sanctions freeze foreign assets and isolate banks. China studies this closely. From China's perspective, relying too heavily on dollar-based reserves creates a strategic weakness. Because if conflict escalates, the asset you thought was safe might become unreachable. Gold solves that problem. Gold doesn't need SWIFT. It doesn't need permission. It doesn't depend on a US bank clearing the transaction. Gold can be moved, stored, swapped, or used as collateral internationally. Even when political trust collapses, gold remains tradable. That makes it uniquely powerful. China isn't just buying gold to look rich, it's buying independence. It's building the ability to keep trading and surviving even if financial restrictions tighten. And that possibility is not fantasy. The global financial system has already shown that access can be weaponized. China hoards gold because it refuses to be trapped by a system it doesn't fully control. Another powerful reason is the long-term objective of weakening dollar dominance. Not by attacking it directly, but by slowly creating alternatives. The US dollar is not just a currency, it is global infrastructure. Oil is priced in dollars. Trade contracts often use dollars. International loans are often dollar-based. Even countries that dislike US policies still depend on the dollar system because it's liquid, stable, and accepted everywhere. This creates enormous US advantage. But China wants a world where trade can happen without total dependence on the dollar. That process is often called de-dollarization, but it isn't a single event. It's a gradual shift. Gold plays a role because it provides a neutral reserve asset for countries that want to diversify away from dollars, but don't want to fully trust another currency. So if China increases gold holdings, it signals stability and strength. It also encourages other countries to hold more gold. Over time, that reduces the share of reserves held in dollars. That doesn't kill the dollar overnight, but it makes the world more multipolar. And in a multipolar world, China gains more flexibility, more influence, and more bargaining power. Gold is also about confidence, both internationally and inside China. When a central bank accumulates gold, it sends a message. We are strong, prepared, and secure. This matters because economies are emotional as much as they are mathematical. People and markets react to signals. If investors believe a country is resilient, capital flows in. If investors believe a country is vulnerable, capital rushes out. China faces challenges: property market stress, demographic pressures, and the constant tension of global politics. Gold becomes part of the credibility toolkit. It strengthens the image of national strength. It reassures domestic markets that the leadership is taking precautionary action. It also reassures international partners that China has financial depth. Even if China never plans to use gold directly, just holding it builds psychological power. And when trust in currencies starts to wobble, when inflation rises or debt grows, gold becomes even more valuable as a confidence anchor. In this sense, China's gold buying is partly symbolic, but not in a weak way. Symbolism is power in finance, because in global markets, perception can move faster than reality. China hoards gold because it strengthens the belief that China has options, and options are influence.